Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Catherine Virga, who is the Director of Research at CPM Group, making a return visit. Catherine, so nice to see you.
Thank you very much for having me back on the show.
Now, I love when you come on because we get to talk about base metals. Base metals kind of outside of the precious metal area. And interesting to sort of get an idea of what's going on there, because if I'm not mistaken, much more tuned into basic economic conditions, supply-demand factors, etc. So just kind of give us a sort of an overview right now of what's going on in the base metal sector.
Yes, absolutely. The base metals markets are far more supply-demand driven than in the gold market, or even in some of the other precious metals markets. And there has been some strong fundamentals supporting prices earlier this year. We've had this, gradual rebound in economic conditions across the world. Really, we've had a pickup in the U.S., Europe, China, even Japan.
In Europe, really? I mean, Europe's been kind of on the weakish side, and we saw recently some further action taken by the ECB to try to stimulate the economy over there. I don't know if that's going to work out. It's pretty much the same sort of remedy as what they've been using. But you say that Europe has been a positive for the metals overall?
Well, earlier this year, so that's really where I was seeing the investors have been pouring into the market, and really the first 7 months of this year, we saw record open interest across the base metals, and a lot of interest based on the economic recovery. Now that's changed going into August. We had a real sell-off across the base metals, with market participants leaving, and there's been weaker statistics coming out of Europe. Japan has also been a little bit weaker. Brazil just is in a recession. So demand has not proven to be as strong going into August, and it's really these mixed kind of demand fundamentals that are putting investors on the sidelines. And I would say there's going to be some repositioning going into September and October, but it's really going to be on the commodities that have much brighter supply fundamentals.
Do we have the sort of speculative interest in base metals that we see, for example, in precious metals? I mean, are there funds that trade base metals for, price appreciation or to short the market, anticipating price declines? Or is that kind of, a much smaller factor?
Well, we used to not have a lot of transparency into the fund activity in the base metal markets. The only insight we really had was in the copper market that traded on the COMEX with the commitment of trader reports. But just in the past month, the London Metal Exchange, under its new owners, has started releasing a similar commitment of traders report. So we can see the speculative positions by money managers and commercials, and that's been quite interesting. There are strong positions being laid out by investors in certain commodities. They've really favored the zinc market, and that's one reason why we've seen, that double-digit growth in zinc prices this year has been that increase in investor interest going into that market.
But is there a fundamental underpinning for that as well, or is it just speculators thinking, hey, their charts are saying zinc should go up and they're buying?
Well, there is fundamentals, but sometimes fundamentals are slower to react than market's expectations. Investors want to price things into the market well in advance of the actual deficit to occur. So, yes, there's
sometimes they price in the opposite,
yeah.
Right? It's the old saying, the market always tells the truth, but not always on the instant, right?
Absolutely. So the market is anticipating that the zinc market will move into a tighter supply-demand balance. We've already had a deficit emerge in it, but in 2015, some of the largest zinc mines are going to be closing. This is the end of the life of the mine, and there's really limited supply to replace that. And so that is really what the market's anticipating. It's just it's not exactly here in the market just yet. We'll see tighter inventory holdings going into 2015, but we're already in a deficit, so there is some fundamental support there.
Now, in the past, China has been a big factor. It's probably still a big factor. Is there anything we can see in terms of maybe a leading indicator from base metal prices that would sort of clue us off as to an economic rebound or growing strength in the Chinese economy?
The two things that most analysts focus on are the property markets in China as well as the manufacturing activity. And obviously there's some weakness in the property markets, but our insight and the analysts that work for us at CPM Group are expecting to see some government support for the housing markets with loans and helping with property values going into the fourth quarter, really. And manufacturing-wise, this is continue to expand, but the growth there has been sluggish, and it's why we're really kind of focusing more on what commodities have brighter supply fundamentals versus demand, because there's so many mixed signals going on there.
What about Africa? Africa seems, it's this enormous continent, natural resource rich. I mean, how does that factor into the longer term outlook for many of these metals?
Well, there are certain countries that are large producers of base metals. Copper is a market where we have significant growth in new mines in Africa as well as expansion.
What countries?
It's the Congo, it's Zambia. Those are the two bigger growth countries right now in terms of new copper development assets. And the concern there is whether or not these countries will continue to allow foreign market participants to just put investments into mine infrastructure, but not the refining and the downstream products to add that more value add product. And if there are bans on the exporting of concentrate, which is being shipped to China and other smelters in Asia, then we could see a drop off in supply. This is something that has happened in Indonesia, which has driven up nickel prices this year. They banned the export of unprocessed ore because they want the investment, and it's been a huge driver of that 30% increase in nickel prices. And you could see the same thing with copper in Africa, except that just like Indonesia, they're struggling with the proper infrastructure on the power side to support the smelters and refiners. So with the corruption, they don't really want the tax dollars to stop from the exports before they can have the proper investment into the refining capacity needed.
Seems like when we talk about Africa, there's always that regime risk, but it kind of seems like in the big picture, those risks are starting to subside somewhat. I mean, we could maybe be a little bit more optimistic for the long term than what has been the case in the past. Would you say?
Well, there's still risks involved in making investments, and right now with the mining sector where it is, equities underperforming, the risk appetite of these large diversified companies to enter into Africa when there are those underlying political risks are not really that supportive right now. So I would say we're not likely to see a surge in development in Africa until the companies have appreciation in their stock prices and they're being valued for those resources that they're developing.
All right, so we stay focused on the very established fundamentals. Catherine, always a pleasure. Thank you very much.
Thank you very much for having me back on the show.
Sure. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.